Hey guys, Akil Stokes here. Welcome back to another Trading Edge video. It is great to be back. I've been away from the markets for pretty much 3 weeks now, which has been a blessing in disguise, and I'll tell you more about that in tomorrow's episode of the Trading Coach podcast, where we talk about the dark side or the downside of trading routines. But my trading year starts again on Monday. It is time to get back on the charts, and I wanted to share that experience with you guys as I come in each and every week and share with you some of the top trading ideas that are on my radar for the week to come. So if you're brand new to the channel, if you're brand new to the Trading Edge, make sure you subscribe. That way you get your weekly fix of technical analysis, and of course with other videos I put out throughout the midweek and podcast episodes and all the other fun stuff like shorts that we do on this channel. Now, before we hop in, I want to give you guys a big warning because we were at a very dangerous time of the year, right? The end of the year is very dangerous because we spoke about traders that maybe haven't gotten the results that they wanted throughout the year, try to shortcut that and make up for that at the end of the year by doing all types of crazy things, hoping it's going to make the 11 previous months' results better, and that's never the case. You typically just end up in a deeper hole. We see the same thing for the beginning of the year as well, right? We have this kind of New Year's energy, this New Year excitement where whatever mistakes we made the previous year, we can throw them away, we can rip it up, we can restart, and we get to start fresh. That freshness comes with the excitement of this is going to be my year. I'm going to do all these crazy things. Or maybe you had a great year last year and you want to do even better. Whatever situation you are in, you got to be careful because we have this extra adrenaline. We have this extra excitement. If you've been away from the markets, you have this extra kind of, urge to get involved. And typically the markets are trash right now, right? Remember, most professional traders have been away for a while. This first week is going to be kind of a feeling out week. Imagine two boxers in the ring, just kind of first round, just kind of leveling each other up, seeing what the jab is like. What are you doing? Do you have any tells? And if you get involved, if you're over eager to get involved during that period, well, let's just say the year may not start off the way you think. So my advice to you, because I've made this mistake plenty of times in my trading career, don't be in a rush to take trades. Wait for the market to feel itself out. It's going to take a few days to get that natural movement back, and stick to the trading opportunities that you're supposed to take. So although we're going to look at some charts today, I'm going to share some things that are on my radar. Understand that it may be a completely different story by the time Wednesday or so gets here. So just relax, take your time. It is only the second week of January. There are 50 weeks to go. All right, let's hop in. So let's kick off the year here on the Pound Canada. We're going to start here on the daily chart and just give you a little bit of a refresher of what's been happening. Consolidation, right? You can see price action has been consolidating in kind of a weird looking unstructured channel like area, starting back here in late October and going to current day right now. And we've seen a few head and shoulders patterns complete. We've seen one down here just to kind of make your eyes familiar. A nice little head and shoulders bottom right here. And then we came right back into a head and shoulders top right there. And after breaking through, where do we go? Right to the previous neckline of our last head and shoulders. If I draw a horizontal neckline out here as well, you'll see that this level has been a pretty solid level of structure in the past. Let's take a journey and go left, structure, lefter, structure, lefter, structure, lefter, 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 right? We have structure all over the place here, so it's no surprise that we saw that bounce. Now, where did we bounce to after rejecting or being rejected at this level? Right back to our previous neckline. I think this is the next area if you are looking for shorts to find a potential trading opportunity. We're going to go down to the 4-hour firstly to give you a clearer view at this level of structure. You can see structure support, 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 support right here. And then we're going to go one more time frame down to the hourly to give you a much clearer view at what has happened. So price action has come to this previous level of structure support, horizontal line right in here. Now this is a zone of support, so this is going to be still valid until we reach or unless we break the highs here. So don't think this is like the say all be all point, but I do think this is a good level where we could see some relief in the market, and I think that way for a few reasons. One, if we take a Fibonacci retracement out, I haven't done this earlier, right? I do this analysis live for you guys who are watching this for the first time. It looks as if we have a 618 Fibonacci retracement, right? I'm going to take my Fibonacci retracement tool. I'm going to drag it from the high right here. Let's see how good my eyes are to start the year. Keep in mind, I've been away for 3 weeks, so give me some breathing room. And boom, you can see we're hugging right on that 618 Fibonacci retracement. Number 2, our RSI, right? This is my indicator of choice, the relative strength index, right? It has gone massively overbought. Not only have we gone overbought, but we've gone directly from an oversold condition down here straight to an overbought condition. Again, this overbought went all the way to 91.91, which in technical terms is very high or very extreme. And then number 3, we have a nice little kind of rounding out at this level with a nice lower low, lower close, right? So if we zoom in all the way on these candles here, let me just do this. I'll just one more thing actually too. If we zoom in all the way on these candles, we have a high momentum candle up here, a doji candle, and then we kind of stay within the zone. Again, keep in mind, this is the beginning of January, so the markets do weird things, but we followed it up with not just a lower low, lower close here on Friday, but another lower low, lower close here, or a lower low, lower close with our penultimate candle on Friday, but another lower low, lower close here to end our Friday. So a nice combination of signs there. There's some hidden divergence there as well for you guys that are looking at it. I know some of you Tier 1 members are saying, what about the hidden divergence? Meaning our lower highs right here with our higher highs right here. That's another clue we can add, but a pretty decent level to look for a potential reversal at. Now, I'm not looking for any type of continuation. That's why the hidden divergence wasn't a big deal for me. Remember, where we came to right here was a stopping point. There is nothing that I saw on the higher time frame that said we're likely to continue lower. So what I would be looking for is really only a small little retracement back to somewhere in this, wrong tool, somewhere in this level right here being the first stopping point, and then this level right here being the second stopping point. So you got to measure out the risk reward to make sure it works. Let's just do it really quickly the way I would do it. We may be a little bit too late here, but we will see. There we go. Let's see. We are right here. ATR is 20. Let's see what 20 gives us. High of the candle is here, 79.63. That means 83. Kind of doing math. Look at that. Still got it in my head. My stop loss would be right here. Again, you want to organize your stop loss however you do. Just going off my rules, because those are the only rules that I can follow. It looks like it may be a little bit tight to get to this level and keep a quality risk reward. Yeah, going to be inverse risk reward. So if you're someone looking at this, you'd have to wait for one of two things to happen. One, maybe this isn't your target level, right? Maybe you don't care about this level down here. Let me just bring some volume on to see. Yeah, that's what I expected. Maybe you don't care about this level and you're only shooting for a retest of lows right here, which would give you an awesome opportunity. Or perhaps you look for a secondary reason for entry. Now, Keel, what would be a secondary reason for entry? Well, something like a double top, perhaps. Let's say we get a retracement up here to start the week. We hold this level, meaning we don't break and close above. Well, instead of your entry being right here, right, and your targets being down here, we keep everything but the entry. What I mean by that is, finding the right tool. There we go. Our entry is now wherever that double top forms. Let's just say right up here. Our stops are going to be the same. Boop. Our targets are going to be the same. Boop. And now you can see a much better risk profile. So we call that a secondary reason for entry. So may or may not be a trade for you. I personally don't care. But the point of this video is to show you what a quality trading opportunity looks like. And of course, walk you through what I'm personally using and what I'm looking for to find these trading opportunities. On to the next one. Next up is going to be the New Zealand Canada, and we're going to look for an advanced pattern formation that can also be used as a trend continuation trade. And we just had a very good example of that right here with this cipher that was somehow previously left on my chart from the last time I looked at New Zealand Canada. So as you can tell, I don't really look at this pair too much. But from the top-down analysis, here's what we have. And this is why I always like to look at higher time frames first to get a lay of the land. Our most recent move was a break and close below a pretty major level of structure. Looking left, structure leaves clues, right? Identifying a lower low, lower close allows me to predict that price is likely to continue lower. And if price is likely to continue lower, the next step is me identifying where I think price is likely to continue lower too. We have a few minor levels that we can look at. You can see like these little small candlestick wicks right here, which we did test, which doesn't make this a super kind of no-brainer opportunity. But I think we would all agree the main and key level of structure is going to be in this zone down here. So I'll leave that on my chart for later purposes. Just think, let's just call it 80 cent even, get a little bit above that level. So let's mark up the 80 cent even level, and I am having trouble marking up my charts. It's my first day back, guys. Come on, be nice, be nice. Told you I've been away for 3 weeks. I forgot how this thing works. So bigger prediction, there is a potential that price can go down to that level. So what do we have going down to the lower time frames? Well, let's drop down. On the lower time frames, we have two things that happen, right? One, we had a break of consolidation right here, right? You can see a little sideways channel. We broke to the downside. And now what we're doing is we extend it down and we're putting in what could be a potential complex pullback to the upside. And within this complex pullback is an advanced pattern formation. Now, if you're brand new to the channel, you're going to hear me talk a lot about advanced patterns, harmonic patterns, however you want to name them. Don't get too overwhelmed. To make it simple, pretty much it's a very specific type of consolidation that the market goes through due to the buying and selling habits of institutional traders, which we won't talk about. But we typically see them in areas of consolidation. I trade these things personally outright in their own, but every once in a while, they also come within trend continuation opportunities, and that's the example that we're looking at today. So the advanced pattern formation or harmonic pattern that we're looking at today is going to be called a bat pattern. It's going to complete at our 886. I'll draw out the legs in a little bit, but it's going to look like this. Swing high to swing low. Actually, let me just use this to make it clear for you. This swing high to swing low is going to be our X to A leg. Our first retracement up is going to be our A to B leg. Our failed extension down is going to be our B to C leg. And then our last retracement up is going to be our D completion. And this D completion is where we're looking to enter the trade. If you're aggressive, then it's a limit order right there. If you're conservative, you're looking for some reason for entry and a chance to get short. Now, with advanced pattern formations, we're not looking for a full kind of move back. We're only looking for a specific kind of retracement within this zone. So like a move to like right here for, come on, sticky mouse. A move to like right here, for example. But what I'm saying is different about this opportunity is because we have the higher time frame analysis that says, hey, we are in a bearish trend continuation type of situation, that what you can do with this advanced pattern formation is instead of just taking a normal target one off, there we go, one off here and two off here, what you can do is if you want to shoot for more, you can hold on to the secondary part of your position and shoot for that move down to the 80 level, which I think is also going to be very close to a 127 extension, which is also where I think this would complete at based off Fibonacci. Oh man, I'm starting the year off on fire. Look at that, still got it. So right by that 127 Fibonacci extension as well. So again, different ways you can trade this. You can look at this as an advanced pattern formation in its own right, or you can look at this as a continuation trade and the opportunity to enter aggressively into a continuation trade in its own right, or you can do a little bit of both, half as an advanced pattern, but then keep a little bit on just in case we see that bigger continuation down. Look at that. Awesome. 2 for 2. My eyes are still there. As I mentioned earlier, I got a really cool podcast episode coming out for you guys tomorrow, talking about the dangers and the dark side of having a trading routine, something that really opened up my eyes over the winter. So make sure you check it out. And also be a frequent follower of the channel, right? There's lots of cool stuff here. There's the weekly Trading Edge video. There are daily podcast episodes. There are daily YouTube shorts where you can kind of get quick tips that push you in the right direction. This should be a resource that should help push you towards your goals of becoming a consistently profitable trader. But you can only become consistently profitable if you're consistent in taking the right steps towards that goal, and let this channel be a major part of doing it. So until next time, plan your trade, trade your plan, hit that like button, subscribe if you're new, and I'll see you guys tomorrow. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.